October is usually a busy month for home sales, but this year's fall market is literally falling. Real estate boards are starting to report their latest monthly results, and they're showing the power of the Bank of Canada's burst of interest rate hikes. Now, Jeannie Lee is here to break it all down. Jeannie, how much of a slowdown are we talking about here?
Well, Hannah, let's use a highway analogy. So from highway speeds to a car that's suddenly going at a residential neighborhood type of speed. If we look at back a year earlier to October of 2021, a lot of housing sales were still happening. It was actually pretty frenzied in terms of a fall market. But fast forward a year later, and this is the picture. A drop by about half in terms of sales in the Greater Toronto area. That was the real estate board that reported today. And really, these sales are at 5-year lows. The Greater Vancouver area, again, another once hot market, sales were down by almost half, 45% from a year earlier. And again, this is just a year after sales were really hopping. Now, the Greater Calgary area, this is an interesting situation where, yes, sales are down from a year ago, but because oil prices have been pretty strong, they have supported the housing market there. So in fact, there's going to be a record year of housing if things stay on track. But still, you can really tell the power of every single rate hike knocking out yet more buyers from qualifying for mortgages and therefore buying, Hannah.
And what do the next few months look like?
Well, if you look at all the factors that are we know will be in play in the next few months, it looks as if it'll be either more of the same or even more of a slowdown ahead. And let's go back to the whole cause of this, that aggressive interest rate hike campaign by the Bank of Canada. If you go back, I brought up an example here for you, or made up an example here. Not made up, these are facts, but yeah, here's a graphic that I made up. So, a $500,000 mortgage, which is not, out of the question and pretty routine in some of the pricier markets. Right now, the variable rate for that mortgage has gone up a lot. So back before this rate hike campaign, 2.2%, you were looking at about $2,100 a month in terms of a mortgage payment. But fast forward to now, when you have rates that have gone up by 3.75 percentage points, well, that rises to above $3,100 a month. So we're talking about an extra $1,000 a month that you have to come up with to make that payment. So you see why that's a problem, especially when the Bank of Canada has promised that there will be more rate hikes. So this debt will basically be even heavier to carry than the current heavy load that a lot of people are already carrying. So that will be a major factor in the months ahead.
Thank you for bringing those tangible numbers. It really gets it into your head, Jeannie.